The purpose of this presentation is to discuss the financial standings for the company Amazon.com Incorporated. Um, all of the data was gathered from the 10K form that was presented on the SEC website, and all information and ratios were gotten through the textbook. So to start off, I wanted to take a look at the statements presented in the form by Amazon, as I have prepared a horizontal and a vertical analysis. It's important to remember that throughout this presentation, all of the data that is presented is recorded in millions. So keep that in mind as we're reviewing this information. So in 2021, Amazon recorded a net income of 33,364 for their net income. Jump ahead 1 year and we see a net loss of 2722. That's a really big jump in the wrong direction. Um, on the forum, Amazon also provided information for 2020, and we actually saw a growth from 2020 to 2021. So that 33,364 is actually a growth. So they went from growing and not just to decline, but to an incredible decline to actually record a net loss in the billions of dollars. We see on the horizontal analysis that this is a net change of negative 1,326%. That's an incredibly quick turnaround in the wrong direction for Amazon. So the question then remains is why that analysis, or excuse me, why that change became so drastic for Amazon. The biggest thing that stood out to me was this foreign currency translation adjustment. We actually see from their 2020 information that Amazon went negative from their 2020 to 2021. That 819 has actually gone down from 2020. But then in 2022, we see an incredible jump from negative 819 to negative 2586. That's a negative 68% decrease, as we see by the horizontal analysis. And that just goes to show that Amazon is losing an incredible amount of money um, in this foreign currency translation adjustment. So the question is, is that going down? And the question can't just be about Amazon.com, because as we'll see later, their sales have actually increased and increased. The problem is that as you look down on this horizontal and vertical analysis chart, they're losing an incredible amount of money. So while they're selling at incredible rates, they're losing money faster than they can gain it. So the question is why? Part of that is economical, the value of the dollar compared to other currencies. Um, other factors include unrealized gains or losses. In 2022, they had 823 in a loss for unrealized gain. That's over double what it was in 2021. And the reclassification adjustment for losses or gains, um, that went from 34 to 298. Um, so what we see is that from the vertical analysis, 95% of that net loss came from that foreign currency translation adjustment. 95%. That's an incredible drain on Amazon's financial resources. So one thing that the company is going to be responsible for doing is finding a way to change that. Moving on, let's take a look at the financial metrics that I have calculated based off the information I found in the 10K form presented by Amazon. In 2020, Amazon's growth profit was 22,899. Again, remember this is in millions. And then look forward to 2021, the company increased. They're on the right path, 24,879. The gross profit rate for 2020 was 0.06. There's minimal difference from 2021. It becomes 0.05. But then take a look in 2022. The gross profit became 12,248 and had a gross profit rate of 0.02. Again, while we may see slight declines between the years 2020 and 2021, we don't see a pattern of this significant decrease. So there has been something that happened this year that's causing these numbers to drop. But look at the operating income. In 2020, they were operating with 66,064. But in 2021, they dropped all the way to 46,327. However, one interesting thing to note is that the operating income actually grew in 2022. They jumped to 46,752. That's a 1% increase from 2021. So that number is actually trending in the right direction. But then when we go back down to that net income, just like we saw in the horizontal and vertical analysis, we went from a net income of 33,364 in 2021 to 2722 loss in 2022, a change of 13.26%. It's an incredible change. And what we see from this data is that Amazon is truly struggling right now. This last year, they cannot seem to control their losses. And we'll take a look at the end at their sales so that we can see that it's not that they're not able to do what they've always been doing. It's that they can't seem to do it. This last year in 2022, they weren't able to do it in a cost-efficient manner. So let's take a look at the liquidity ratios and just look at the strength of Amazon as a company, because one bad year does not make a company financially unsound. Every once in a while, you're going to have these bad moments, these bad years, and while they're trending in the completely wrong direction, and it was an incredible drop, um, the company is not necessarily in a bad place financially, because what we're talking about is the industry leader, the essential giant of this industry, who's had a commanding lead. So take a look at the current ratio to see that their current ratio is 0.94. That's a really high current ratio. That this shows that they are able to turn debt, or excuse me, turn assets into cash to pay back debt pretty quickly. And their current cash ratio is 0.35, showing that their ability to pay back debt using only cash is at that 0.35 mark. So this shows that Amazon as a whole is still in fairly good position. That 0.94 current ratio is very high. So overall, Amazon is still performing at a high financial position, at least in the position of overall liquidity. Take a look at the asset ratios. Their asset turnover ratio is 3.5, which is actually still pretty high. But that accounts receivable turnover ratio is 12.13. According to a quick internet search, the average for accounts receivable turnover ratio was in the sevens. So they're operating much higher than that. So Amazon is still doing well for their assets as well. Their turnover ratio is 3.5, which is also high. So again, the company is still performing well in these metrics. Move on to leverage ratios, where we see that their total debt ratio is 0.005. This is where we start getting a little uncomfortable, because their debt to equity ratio is 0.46. They're spending more than they're able to make, or at least they did last year. And before that, they were performing strong. So what happened in this last year to make that jump so incredible? Look at the profitability ratios. This is where we see exactly what went wrong. Their return on their assets were negative 0.01, and their return on equity was negative 0.02. So they were spending more than they could. And we saw from the horizontal and vertical analysis, a lot of that had to do with their selling overseas and that fee and that expense that it took them to translate those foreign currencies. Um, but we see that their return on assets and their return on equity were both negative. So while the company was overall strong, when we start taking a look at current assets and current return for equity, we stop seeing strong numbers and we start reporting negative. So we see that this last year was a black spot on their otherwise impressive resume. Taking a look at the market value, we see a price to earnings ratio of 10, which means they're spending about $10 for every one share of stock, and a market to book ratio of 93.4. Please note that the two numbers above the 93.4 were calculations that I did, but their actual market to book ratio is that 93.4. So I wanted to take a minute to compare them to their top competitor. And this was difficult because you take a look at Amazon.com and there's really no other company that does exactly what they do. Amazon is not only the largest online retailer, but they also have their hand in so many different areas of business. They've moved into trying to start grocery stores. They started as a simple book company. They sell all kinds of merchandise. Usually when you can't find something in a store, Amazon has it. They've become so diverse and they've moved into different aspects of business. So it's really difficult to compare them, um, even even to an industry as a whole, but especially competitors. So what I chose to do was compare them to, in my mind, um, the other top competitor in the United States when you think of um, when you think of industry giants, which is Walmart.com, because for as long as I can remember, Walmart has been a staple in the communities. They have completely dominated that market. Amazon dominates the internet market. And now Walmart has released their ability to sell online in an attempt to compete with Amazon. But Amazon is by far the industry leader. So I wanted to compare the two and see how these two industry giants were comparing. And keep in mind again, just as with Amazon, Walmart's numbers are posted in the millions. So for net income, we had 13,510. That was their income for 2022. Amazon had a net income of 2722 negative. That's a net loss. So we see an incredible gap there. But when we look at just 2022, if Amazon had even matched that, we would be looking at a net income of for Walmart of 13,510, and Amazon would have one in the 33,000s. So Amazon has been performing at an incredible rate, but had a year that completely dropped them when in our comparisons, because now Walmart not only has a lead, but an incredible lead, at least for the year. But what's interesting to me is when you take a look at the total assets. Walmart posted 13,510 in income, but their total assets amount to 24,460. Amazon reported a net loss of 2722, but their total assets are 462,675. We're looking at over 200,000 difference. It's an incredible difference in their assets. So Amazon as a company is still operating at an incredibly high rate. They are still operating in an incredibly strong manner, but they have to correct the ship. They've made a wrong turn, and a pretty drastic one, as we've seen from the data that I've presented, Amazon has made a complete 180 and gone the opposite way that they need to when it comes to their spending. So let's compare Amazon's ratios to that of their most likely competitor, which I already said in this for this presentation's purposes is going to be Walmart. So take a look at the gross profit presented by Amazon, which is on the top of each metric, versus Walmart, which is on the bottom. Even in 2021 and 22, Walmart's gross profit is extraordinarily higher than Amazon's. Their rates are much higher, but their operating income is much, much lower. We see that the percent change in operating income was 1% for Amazon, but Walmart actually took a page out of Amazon's book when it came to operating income and went in the wrong direction for a negative 103% change. The net income for Amazon, as we already took a look at, differs pretty drastically from Amazon because the net income for Amazon keeps going up and up until 2022, where Amazon's kind of, if you're looking at the 3 years by themselves, kind of does a mountain peak type thing where it's lowest in 2020, jumps up in 2021, and starts to decline. We see a negative 2% change in 2022. But if we take a look at my recommendations and observations, their sales grew to 513,983. That sales growth shows that Amazon is still operating at a high level. That grew from 2022, which grew from 2021. They're still trending in that upward direction. The problem is that they are not gaining any profit from that sales growth because they're not able to keep their expenses down. And something happened in 2022 behind the scenes in Amazon that has made a change. So as an investor, what I'm looking at is I'm looking at some serious changes that need to be made and need to be made immediately. Because Amazon saw serious deterioration. Compared to their industry competitor, Walmart, they have an incredible distance in their net income. Their overseas business was an incredible strain. Just as an outside investor, that's what I noticed from the information that was presented because as we saw from those horizontal and vertical analysis, 93% of that loss came from that overseas currency translation fee. And the expenses killed what would otherwise be incredible sales numbers. So as an investor, my recommendation would not be to invest, which is weird to say for Amazon.com because if we look at 2021, 2022, we saw the numbers in that first slide. Amazon was operating at a high level, posting strong numbers. But this last year, if we're basing recommendations off this last year alone, I can't recommend investing in Amazon. And that goes back to this profitability ratio. They posted a negative 0.01 return on assets and a negative 0.02 return on equity. Well, I don't want to invest my money into a company that's going to report a return on equity of -0.02. However, I will mention that from a business standpoint, when we go back and we look at their asset turnover ratio, their accounts receivable turnover ratio, their liquidity ratios, their ability to pay back debts, Amazon as a whole seems to be operating as a very strong business. So my recommendation would be to not invest in this company for the current year and reevaluate in 2023 because there's a lot of promising aspects to Amazon. But this last year was not a strong performer. Overall, my recommendation, do not invest in Amazon for 2022, reevaluate in 2023. and wait to see Amazon make that 180 back into the net income profit margin.